Hello and welcome to our financial analysis presentation on NVIDIA. My name is Sarah Gelzim.
My name is Naomi Pisul Kapunay.
My name is Ella Thompson.
And I am Claudio Esteban Isunza.
And today we're going to walk you through an in-depth review of NVIDIA's financial performance from 2021 to 2024. We're going to cover the company overview, financial highlights, a ratio analysis, industry comparison, financial health assessment, investment recommendations, and review points from the third quarter results and investor insights. And I'll pass it on to Naomi to get us started.
About the company overview, NVIDIA was established in 1993 by Jensen Huang, Chris Malowski, and Curtis Prime with a vision to redefine graphics computing. The company groundbreaking moment came in 1999 when they invented the world's first GPU, the GeForce 256. This revolutionized the gaming industry and established NVIDIA as a leader in graphics technology. Over the years, NVIDIA has evolved to dominate markets beyond gaming. It is now a leader in high-performance computing and artificial intelligence with GPUs powering applications across diverse industries. To understand more about our financial analysis, there are some key factors to understand NVIDIA's financial analysis. So the first one is the dominance of the GPU market, which has driven a strong revenue and profitability. The second is the boom in artificial intelligence, especially in the 2023-2024 years, which has significantly increased demand for NVIDIA's products. Another critical factor is the company's heavy investment in research and development that enable to maintain the technological leadership that NVIDIA has right now. The company also has been facing challenges such as chip shortages and geopolitical tensions. Additionally, while the pandemic-related demand for GPUs surged in 2020 and 2021, a post-pandemic normalization has led to slower consumer demand in gaming GPUs. These factors help contextualize NVIDIA's financial performance, which we'll now explore.
Thank you, Naomi. So I think one very important factor when deciding essentially what stock to pick is looking at financial highlights. And NVIDIA's financial highlights showcase a period of exceptional growth between 2021 and 2024. Essentially, given the boom in the AI sector, NVIDIA is booming. And for example, the company's revenues increased by 256%, rising from 16.68 billion to 60.92 billion. During the same period, net income saw an even more impressive increase of 586%, growing from 4.33 billion to 29.76 billion. Now, what makes these numbers impressive is that they are not easy to accomplish. In fact, many companies within the same industry have net losses. So for a relatively new company to have these numbers, it's truly incredible. Now, the earnings per share also improved significantly, climbing from 0.17 in 2021 to 1.19 in 2024. These figures underscore NVIDIA's ability to capitalize on opportunities in emerging markets such as artificial intelligence and data centers while consistently delivering value to its shareholders. Next slide, please. So again, continuing on financial highlights, the profit and loss statement provides further insight into NVIDIA's operational efficiency. From 2021 to 2024, the company's sales increased from 16.68 billion to 60.92 billion. This is a huge number. And although the cost of goods sold also rose during this period, it grew at a way slower rate than the revenue, indicating improved margins. The company's earning before interest and taxes also demonstrated substantial growth, rising from 9.15 billion to 40.79 billion. This highlights NVIDIA's operational effectiveness in managing costs while scaling its operations. Overall, these numbers reinforce the company's financial strength and growth trajectory. Next slide, please. And again, similar to financial highlights, and we continue in financial documents, the cash flow statement reveals that NVIDIA's strong it has a strong liquidity position. Between 2021 and 2024, and by the way, as a side note, I keep mentioning this time period because this is the period where NVIDIA has really seen a very strong growth and it's projected to continue on that path. So the operating cash flow grew from 5.82 billion to 28.09 billion. Similarly, free cash flow surged from 4.69 billion to 27.02 billion. This showcases the company's ability to generate substantial cash from its operations. Now, despite these increases, NVIDIA has maintained consistent dividend payouts, signaling its commitment to balancing shareholder rewards with reinvestment in growth opportunities. The financial flexibility positions NVIDIA well for future strategic investments. So again, NVIDIA is not only a company that is retaining earnings for investments, but also has dividend payouts. Next slide, please. And for now, the last slide in regards to financial highlights is that NVIDIA has demonstrated a very strong financial management over the period of 2021 and 2024. They've peaked at 12.03 billion in 2023, but decreased to 11.05 billion in 2024, signaling improved stability. Shares outstanding saw a slight reduction from 25.07 billion in 2023 to 24.94 billion in 2024, enhancing shareholder value. And although these numbers in terms of debt may seem high, they are being used to invest in new projects that are certainly generating a huge return to the company. And lastly, the dividends per share remain steady, ending at 0.015 in 2024, reflecting a balance between rewarding the shareholders and reinvesting for growth, which again, it's extremely important in the sector.
Now we will begin our ratio analysis for NVIDIA based on the ratios that we calculated. So in NVIDIA's profitability in 2024, NVIDIA showed major improvements across all three profitability ratios, making it a standout year for the company. The return on equity surged from 19.77% in 2023 to 69.24% in 2024, which reflects the company's ability to generate significant profits from shareholder investments. Similarly, the return on assets increased dramatically from 10.61 to 45.28%, showing improved efficiency in utilizing its assets. The net profit margin is also highly impressive at 48.85% compared to 16.2% in the prior year. This demonstrates a strong ability to control costs and a high margin revenue generation. The strong growth in profitability indicates that NVIDIA is benefiting from its innovations. Now moving on to price ratios. NVIDIA's price ratios reflect shifting market sentiment. In 2021, the PB and PE ratios indicated overvaluation, while the decline from 2022 to 2023 aligned share prices more closely with its earnings and reflected moderated growth expectations for the company. The surge in both ratios in 2024 suggests renewed market optimism and an investor willingness to pay a premium for NVIDIA's future earnings. This is likely driven by its anticipated growth and the breakthroughs in AI, GPUs, data centers, and things like that. Now, moving on to their valuation ratios, their EV/EBITDA ratio dropped from 8.11 in 2023 to 1.97 in 2024, signaling improved earnings efficiency and potential undervaluation. This makes NVIDIA a potentially attractive buy for investors focused on earnings growth. The PEG ratio reflects NVIDIA's stabilization after being deeply negative at negative 97.46%, or just negative 97.46 in 2023. It recovered to 14.34 in 2024, suggesting renewed investor confidence in their growth expectations. Moving on to their dividend yield. As you can see, it remained consistently low throughout the 4 years. And this just shows that NVIDIA is a company that focuses more on reinvesting rather than paying dividends. NVIDIA's strengths overall lie in its exceptional profitability over the past 4 years and growth-driven strategy. However, there are risks associated with valuation volatility and speculative trends, particularly in the year 2024. The outlook for NVIDIA remains pretty solid with strong growth potential, though caution should be taken on high valuations.
Two of NVIDIA's greatest competitors are AMD and Intel, both of which are companies driving the innovation within the technology sector. Looking at their PE ratios, NVIDIA shows steady investor confidence, peaking at 83.29 in 2024, reflecting strong growth expectations. AMD exhibits extreme volatility, surging to 283.48 in 2023, which indicates speculative investment behavior. And Intel's PE ratio turned negative in 2024, signaling significant financial challenges or losses. Looking at their PB ratios, NVIDIA consistently leads, peaking at 54.55 in 2024, indicating a premium valuation and strong market dominance. AMD starts high but drops significantly to 3.91 in 2024, reflecting stability or stabilizing but subdued investor sentiment. And Intel's PB ratio declines to 0.99 in 2024, also showing an undervaluation and weaker confidence in its growth prospects. And then lastly, their share price. NVIDIA's stock shows rapid growth, rising from $25.52 in 2021 to $146.67 in 2024, showing incredible market leadership. AMD share price is volatile but stabilizes at $138 in 2024. And then Intel share price declines consistently, dropping to $24.05 in 2024, also highlighting diminished performance and investor confidence. For the EV and EBITDA ratio, NVIDIA decreases steadily to 1.97 in 2024, reflecting improved efficiency relative to earnings. AMD's ratio remains volatile but stabilizes at 37.87 in 2024. And Intel shows significant improvement, peaking at 19.48 before dropping to 10.63 in 2024, which also indicates better cost control. For the PEG ratio, NVIDIA's value turns positive in 2024, also suggesting consistent growth expectations from investors. AMD's PEG ratio remains deeply negative, reflecting inconsistent growth or overvaluation concerns. And Intel peaks at a very high 180.7 in 2024, showing optimism for growth, but also potential overvaluation risks. Regarding their dividend yield, NVIDIA maintains minimal but consistent positive yields throughout, demonstrating a cautious dividend policy. AMD pays no dividends as the company prioritizes reinvestment for growth. And Intel's dividend yield peaks at 6% in 2022, but drops sharply to 0.5% in 2024, thus signaling reduced shareholder returns and amid financial challenges.
So now that we have discussed the numbers and the ratios, we are gonna talk about financial health assessment overall. NVIDIA achieved a phenomenal growth, and again, I've been mentioning this from the very beginning of the presentation. They have leveraged its leadership in AI and the data center technologies. Its financial health reflects strong profitability, prudent liquidity management, and high investor confidence. Next slide, please. NVIDIA's financial health remains robust. Its liquidity improved significantly, with cash reserves increasing from $11.56 billion in 2021 to $25.98 billion in 2024. Profitability also reached new heights with a record net profit margin of 48.85% in 2024. These factors demonstrate NVIDIA's strong foundation for sustained growth.
Now to talk about the investment recommendations, our recommendation is a strong buy for NVIDIA stock. The company's leadership for AI robust financial performance and innovative strategies, ensuring sustained growth. So despite the valuation risk, NVIDIA has a dominance in AI, GPUs, and data centers positions. So it is a long-term success. It's crucial to consider also the risks such as geopolitical tensions. However, NVIDIA's strong fundamentals and innovation mitigate these concerns. The key growth drivers include NVIDIA's leadership in the AI revolution, expanding data center market, and innovative technologies like the Blackwell architecture. So these drivers ensure NVIDIA's continued dominance and ability to capture new market opportunities.
Now, looking at NVIDIA's Q3 results, it demonstrates the company's ongoing leadership in the AI and data center markets. CEO and founder Jensen Huang stated, "The next wave of AI is enterprise AI and industrial AI," emphasizing the company's focus on these growing sectors. During the quarter, NVIDIA's data center revenue continued its extraordinary performance, generating triple-digit percentage growth in each of the last 6 quarters. And this growth highlights the company's ability to capitalize on surging AI demand, even as some Wall Street analysts question how long the AI spending boom will last. But Huang addressed these concerns directly, reaffirming confidence in the durability of this growth. The launch of NVIDIA's Blackwell architecture, which was introduced in this call, is also thought to be a game changer for AI. It delivers 30 times faster AI inference compared to the current H100 systems, alongside dramatic improvements in energy efficiency that will also significantly reduce operational costs. At half the price of their most successful and popular GPU, Blackwell would also offer a unique value that would make advanced AI models more financially accessible for businesses of all sizes. Investors see this Blackwell architecture as a key driver for future revenue, especially in enterprise AI. The continued demand for NVIDIA's products, coupled with its ability to innovate, strengthens confidence in long-term growth. Just data center revenue of $30.8 billion, which was up 112% year over year, reinforces this optimism and positions NVIDIA as a leader in the evolving AI market.
All right, to conclude our entire presentation, NVIDIA has achieved phenomenal growth over the last 4 years. With revenue increasing by 265% and net income rising by 586%, the company has proven its ability to innovate and capitalize on emerging opportunities, particularly in AI and data centers. NVIDIA's leadership in cutting-edge technologies positions it for sustained success despite challenges like geopolitical risks and high valuations. Its strong financial foundation, exceptional profitability, and strategic reinvestments ensure its continued growth in a competitive industry. And that's NVIDIA. Thank you for listening.